Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options.
Just a couple of comments. People are saying that Jack's presentation is excellent. Well, if you haven't been here before, this is what Jack does every time he's at the ISE. So he actually keeps the bar very, very high, and he manages to hit the expectation every time. So please come back when Jack's with us. Jack, you do a great job, and this is another great presentation. Because a couple people have asked for the archive, and that will be available tomorrow. You can just go to our site, fxoptions.com, and go back, and you can listen to the whole presentation over and over and over again. And don't forget, please go to blackswantrading.com to learn more about all of Jack's services and his son. And they also, again, as I said, they write the currency currents each and every day. That's free. So I would recommend that you go and sign up for that. Let's see, Jack, is there anything I missed? I'm not sure. I tried to go through all the questions.
Some other questions. Question here of too big to fail. I think I was just commenting on my comment. Too big to fail is really, one of those disasters that is coming back to bite us again. I agree with that. Let's see, what else? Just the euro as a percentage of the dollar index, gentleman says is around 60%. I think it's like 58% of the U.S. dollar index, the euro. That was one of the questions.
So, Jack, when you're looking for the big move, I know you really hit it big in 2008. Looking for the big move, do you start small? Because I know you look at a lot of the correlations, and it's a technical term, but how these assets are trading against each other, and is that how you start to spot a potential for, instead of, if you don't mind me using the metaphor, the 10-yard pass, that you see the long bomb, the 70-yarder, where you might see a tremendous move one way or another? How do you actually spot those?
Well, I think you spot them in what we're seeing now. You just see some of these disconnects that are so large relative. And again, you don't have nothing is set in concrete. But for example, this idea of this disconnect to us of the real economy and the financial economy is one of those moments, especially because everybody in the world thinks the dollar is done for. Those are the type we like the most, and they're tough to do. They're tough to play because what happens is you start to peck at it at the wrong time and you're wrong, and you peck at it again and you're wrong, and you peck at it again, you're wrong, and then you just stop and you say, okay, I'm capitulating to the trend. I'm never going to make this trade again. But the reality is, that's why, as you said, Steve, you start small on these things. When you see these what you think is a major disconnect, it may not be. You may be totally wrong. It may be wrong for a while. But if you play it small and you're wrong, play it small and you're wrong, keep playing it small, and then it starts to turn, and that's making money. You start to add to it, and very, very quickly you make up for the number of scouting missions, so to speak, that you made. And I think you know that, Steve, from trading. And I think the fundamentals really is the only way you can see these major disconnects. We saw it in the credit crunch, as I said, and that's what allowed us to position for it. And again, that's a perfect example. We lost money from March, from the end of March to end of July. We lost money in the U.S. dollar because we thought it was going to turn violently, and we kept being wrong, and we were down. We weren't doing very well at all, and then all of a sudden it turned, and we got it right, and we positioned more into it, and we had a very, very good year. But that's what happens. You never know when these things are going to turn. You can't pinpoint them. Another example, Steve, and you know this well, is the NASDAQ. Everybody knew the NASDAQ was way, way overdone. We just didn't know when. Right. If you played that big and you were too early, they carried you out. But if you played it small, took your time, and then got it right, there's where you made the big bang. So you do start small for the trade, but you use the global macros to see the major disconnects.
That's well put, Jack. You're right. A lot of us have looked back and said, I call that one or I call that one. I know I have. But if you're wrong in the timing by not a day, a week, but 6, 8, 10 months, and you're putting a lot of your portfolio at risk, well, you're probably not going to make it. But as Jack said, if you can actually peck at it and wait for, to be right and then have the guts, that's the hard part, is to actually make or create your position, double or triple your position when you're right, because, if you need to have you're probably going to need a significant win after you've had a couple small losses to, outweigh it or overbalance it. That's what you need to do. But, I think you need to, as all investors, look at risk reward. As Jack's saying, just be careful here. You got fundamentals saying one thing, you got technical saying another. And if you ask most experts, they're going to tell you that they don't like the dollar, as Jack said. But take a look at the charts over the last, Jack, 3 or 4 months? Pretty much consolidating, even though if you were to go by the headlines, it seems so negative each and every day. But as you said, we're not seeing new lows in the dollar in the last, couple of weeks for sure. So maybe something's changing. Who knows? Yeah,
Steve, it's funny because I was talking with John Ross today about that. John Ross is my son, who does our director of research, in fact. And I said, if you walked up to the average person on the street and you asked them, is the dollar at all-time low, or somebody that's somewhat familiar with financial markets, I think they would say absolutely, the dollar's being destroyed. But the dollar's 7% above its all-time low. And you're exactly right. It's interesting. And also the euro is another good example. The euro went to 150. It's having a lot of trouble here, even though gold blew off to a massive new high. That doesn't mean that the dollar can't continue down and go, but it says just be careful in here. Everybody's kind of one way, but there's some divergence that you can clearly see.
Good point. Jack, I want to give you just a moment or two to just recap. You did a great job, so I just want all the attendees would love to hear just another minute or two from you. And I just want to remind everyone, Jack's going to be back on December 8th talking about trading the currency markets either way. And actually, Jack did that today, talked about plausible scenarios. And I use that phrase very often. So he'll be talking about option positions where you could go either way. And again, that might be a little more expensive, but that, again, just to open up your mind, whether you do it in a simultaneous trade or if you do, as Jack was saying, the idea that you might look at one and then switch out of it pretty quickly. So please come back on December 8th. Jack, could you give us some closing comments?
Sure. First, just like to say happy Thanksgiving to everybody that's here. Thank you. Again, thanks for hanging out for all of this. And I would just say, just start to step back and look at some of the global macros. And it seems a little daunting at first, but if you start to do it, just do some of your reading even on a weekly basis and just think about these, think about rationales, think about alternative scenarios, think about the major, money and, and economic growth. You really start to see that, I think you can start to narrow in, and as you get, better and better at this, I think you can start to add more and more nuance, and it's really not as hard as you think. Just start with it with the framework in the right way, and I think it'll help you whether or not you're a technical trader or a fundamental trader.
Well, Jack, thank you again. I want to wish you a happy Thanksgiving. You've done a lot of presentations this year, so enjoy and take it easy over the next day or so. But we'll be looking forward to you coming back on December 8th.
Yeah, I will too, Steve. Thank you. I appreciate it.
Thanks. So, again, on behalf of the IC, I want to thank Jack Crooks and the whole team there at Black Swan Trading. Happy Thanksgiving. I want to remind everyone, please, to come back. Next week we have Tony Hansen with us, and she'll be talking about identifying different trading spots, if you will, trading targets for FX options. So sometimes it's important if you have an actual goal of where you think something's going to go, and Tony will be talking about those targets. And Jack will be back with us on December 8th. So on the behalf of the ISC, this is Steve Meisinger, and I want to wish everyone a happy evening, great trading day tomorrow, and please join us again real soon. Thank you. Good night, everyone.
Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts.